You don't use dollars to run the world. At least, not the dollars you're thinking of. The paper bills, the numbers in your bank app, even the money the government officially prints. Those are the visible layer. Underneath them is another dollar system. Bigger, faster, less regulated, and it moves more money in a day than entire countries do in a year. Most people have never heard of it, even though it quietly decides who gets liquidity, who survives a crisis, and who gets wiped out when the lights flicker. This is the shadow dollar system, and right now, it matters more than ever. Here's the uncomfortable part. The US government does not control most of the dollars used in global finance. Not directly, not even close. The majority of dollars that grease the wheels of trade, speculation, and leverage are created outside the United States by institutions that aren't American, operating under rules that were never designed to protect ordinary people. And yet, when this system breaks, the consequences always land back at the same place: everyone. To understand why, we need to rewind. After World War II, the dollar became the world's anchor. Countries trusted it, traded in it, stored it. At first, that made sense. The US had the gold, the factories, the political stability. But as global trade exploded, something strange happened. The world needed more dollars than the US could or wanted to supply. So the system improvised. Banks outside the US started doing something clever. They took deposits labeled in dollars and lent them out as dollars, without those dollars ever touching American soil. No Federal Reserve approval, no Treasury oversight, just balance sheets. These were called Eurodollars, not because they were European currency, but because they were dollars created offshore. And once that door opened, it never closed. By the 1970s, this offshore dollar market was massive. By the 1990s, it was essential. Today, it's the backbone of global finance. Here's the key idea that trips people up. These are not counterfeit dollars. They're not illegal. They're promises. A bank says, "I owe you dollars." Another bank accepts that promise as good enough, and the system moves forward, as long as everyone trusts everyone else. That's the shadow dollar system. No printing presses, no cash trucks, just liabilities stacked on liabilities, all denominated in dollars. And it works beautifully, right up until it doesn't. Because this system has a hidden rule. Dollars in the shadow system are abundant in good times and desperately scarce in bad times. That's not a bug, that's the design. When markets are calm, banks are happy to lend dollars to each other. Credit flows, trade hums, assets inflate. But when fear enters the room, everything flips. Suddenly, every institution wants real dollars, not promises, not substitutes, actual settlement. And that's when the math gets uncomfortable. There are far more dollar-denominated obligations in the world than there are dollars available to settle them. This is the illusion breaks. In 2008, it broke violently. European banks had borrowed trillions in short-term dollars to fund long-term assets, mortgages, derivatives, structured products nobody fully understood. When confidence cracked, the dollar market froze. Banks didn't trust each other's promises anymore. They wanted cash, but the cash wasn't there. The Federal Reserve didn't step in because it wanted to be generous. It stepped in because the alternative was a global dollar heart attack. So it opened swap lines, quietly. The Fed created dollars and lent them to foreign central banks, who then funneled those dollars into their own banking systems. This wasn't charity, it was containment. Because when the shadow dollar system collapses, it doesn't stay offshore. Trade stops, supply chains snap, asset prices implode. The irony is that most people never noticed. No headlines screamed Eurodollar shortage. No press conferences explained offshore liquidity plumbing. The crisis was framed as housing, or greed, or bad risk management. Those were symptoms. The real problem was structural. a global system built on dollars without a global dollar backstop. Fast forward to today, the shadow dollar system is larger than it was in 2008, more complex, more leveraged, and still fundamentally fragile. Emerging markets borrow in dollars because local currencies are unstable. Corporations issue dollar debt because investors demand it. Banks use dollar funding because it's cheaper. Everyone assumes dollars will always be available, until they're not. When the Federal Reserve raises interest rates, it doesn't just affect American mortgages, it tightens the entire shadow dollar system. Dollar funding becomes more expensive, liquidity dries up, weaker players scramble. This is why crises often begin far from the US, but end with the Fed at the center. Asia, Latin America, Europe, different places, same pattern. The hype says the dollar is strong. The reality is more unsettling. The dollar's dominance doesn't come from abundance, it comes from dependency. The world is locked into a currency it doesn't control, relying on a lender of last resort that answers to domestic politics. That's a fragile arrangement. And here's the quiet twist. The shadow dollar system is invisible by design. There's no single ledger, no official tally, no dashboard showing total exposure. Even regulators see it in fragments, which means when stress builds, it's often detected too late, like smoke seeping under a door after the fire has already started. This is why every global crisis feels eerily similar. Different trigger, same scramble for dollars. And the solution is always improvised. Emergency facilities, temporary lines, quiet interventions, stability restored just enough to move on, until the next time. So ask yourself this: if the world's most important currency exists largely outside the control of the institution meant to safeguard it, who is really in charge? And what happens the day the Federal Reserve can't or won't step in fast enough? There's no clean ending here, no villain to defeat, no simple reform that fixes everything, just a system built on trust, leverage, and silence. A system that works right up until the moment it matters most. And when it breaks, it doesn't ask permission.